Small investors beat Wall Street and the big boys are not happy. Lou Scatigna here, host of The Financial Physician, heard every Sunday 9 to 11 Eastern Time right here on the Jersey Shore on 104.1 FM, WOBM, but also available all the time at thefinancialphysician.com. In 37 years being a stockbroker, I have never seen what I saw this week, where small investors got rich and the big investors lost a lot of money. And it has to do with stocks that have heavy short interest. What's short interest? These are people, mainly institutions, hedge funds, the big boys on Wall Street, who bet against the stock. They sell stock they don't own with the expectation and hope that the stock will fall and they'll be able to buy it back cheaper and pocket the profits. And most individual investors really avoid shorting stocks, but the big boys look at it as a way to make money pretty easily. And if they see a company maybe having some trouble, they'll all pile in and sell the stock short. Now when someone starts coming in to buy the stock, well, the stock starts to go up and they start to lose money. And that's exactly what happened this week with GameStop and other stocks we'll talk about in a second. But GameStop was the big one. GameStop is a retail video outlets that's been struggling for a number of years, almost bankrupt. So these institutions come in and they borrow stock and sell it with the expectation it's probably going to zero, and they will profit at that point. And in GameStop's case, there was 140% of the outstanding shares sold short. Now, how could that be, you would think? Well, they're able to leverage it and be able to sell stock that they don't own, stock that doesn't even exist in the universe. So people on a chat room on Reddit called WallStreetBets knew that they had such a huge position. Now, keep in mind, WallStreetBets subreddit has about 2 million subscribers. So they got together and decided to all buy the stock at the same time. And they came in, and they're small retail investors trading on Robinhood, transaction-free small brokerage firm, and other outlets, and started buying the stock en masse. So now what happened is the stock started to rise, and rise quite dramatically, causing the shorts, the institutions, to start to lose money. And they kept doing it every day and every day. Now here's a stock that at its low last year, in the last 52 weeks, was something like $2.50 a share. Well, earlier this month, it came, let me bring it up on my screen here. The symbol is GME. So earlier this month, the stock started to go up. All right, the stock was, I don't know, $10 a share or so, and then started to go up. By mid-month, the stock had hit 50, then it went to 100, and in the last few days, yesterday, the stock went up to $300, almost $400 a share, closing somewhere in the neighborhood of $275, $280. This morning, the stock went up to almost $500 a share, and right now is $132. Talk about craziness. Now, the big institutions that were short millions of shares, I mean, think about this. They may be short of $3 or $4, millions of shares, and then the stock spikes to hundreds of dollars, and millions and maybe even billions of dollars were lost to these major hedge funds. And they don't like losing money. They're used to winning all the time. They're used to fleecing the retail investors. But because of the Reddit subreddit, so many people coming in and buying small blocks of stock, it just pushed the stock higher, causing millions of shares that are short to have to cover. What does that mean? It means that it's just like losing money on a stock. If it's going down, you can only take so much pain, and then you sell the stock. Well, if you're short a stock and it's going up against you, you're losing money with every dollar it goes up. And it gets to the point of where you're losing too much money and you have to stop the bleeding. So these major institutions had to come in and buy the stock. That added more buying pressure to the stock, and the stock skyrocketed, causing further loss for the shorts and major profits for the small retail investor. Now, again, Wall Street doesn't like to lose money. They're used to winning almost all the time, and they started getting really mad. And you'd see it on the financial radio. They were talking about, well, they should shut down trading in these stocks. They should shut down the Reddit chat room. God forbid that the average investor finally makes money, and they don't. and now they want to have limits on trading and everything else. So it worked. I mean, Robinhood, the small trader transaction-free brokerage firm, now has prohibited people from buying GME stock, GameStop, and now you've seen a reversal in the stock. It was $500 this morning. Right now it's about 11.30, and it's 132 a share. What a roller coaster ride! I mean, fortunes are made and fortunes were lost this morning alone. Now, GameStop is not the only stock that's having the same issue. We see American Movie Entertainment, AMC. This is the chain of theaters across the country that basically have had empty theaters for a year due to COVID. And many of these theaters aren't going to open up again. Well, this stock had a similar ride. Nothing compared to GameStop, but AMC, it was, let's see here. Here we go. It's 52-week low was $1.91. Yesterday, it spiked from $6 to $20 on huge volume. I'm talking hundreds and hundreds of millions of shares traded. And today, down $13 at $6.52. Another round trip that we're seeing here. So we're seeing a lot of these casino stocks basically start to fall apart now as the short covering is over, so that buying is not there anymore, and that there's restrictions being put on margining these positions where you can buy them, and many of the platforms where these small traders trade are prohibiting their investors from buying it. So that's a slippery slope in of itself, because when a brokerage firm doesn't like what's happening in the stock, are they going to be able to prevent retail investors from buying it? I guess they have that power. But these Wall Street hedge funds are very powerful. They make a phone call to Ameritrade or Robinhood or any of the other ones and pressure them to halt the trading or prevent small investors from buying it. So now you have powers on Wall Street trying to influence markets. And think about, we see Twitter being censored. Well, this is censoring people. Well, this is financial censorship. They don't want people to make money. And everything was legal. There's nothing illegal that took place here. All right? Just retail investors just banded together and all bought the same stock at the same time. And now they're looking for other stocks that have major short positions in them to attack them again. Again, it's not illegal and it's not predatory. What's predatory is many companies have been destroyed by hedge fund short sellers that have just mercifully shorted the stock. And I've dealt with it in positions that I've had for myself and my clients as well. And they get away with it all the time. Particularly in the metals market. We see naked shorting of paper, silver, and gold contracts all the time. Fleecing speculators. I mean, I've watched this for 20 years. It happens all the time. So we have a number of stocks out there. There's probably about 15 or 20 of them where they went after them. As I said, I'm reading on some of the websites. Some people think about it. You bought 1,000 shares of GameStop, even at $10 for $10,000, and it went to 500 in a couple of days. But you have to sell. As we see right now, it's down to $132. Still a nice profit if you pay $10 for it, but crazy, crazy trading. Now, yesterday, and I imagine you've been hearing it today, because of the volumes of trading in some of these stocks, that you can't get into your brokerage account, Ameritrade account, had big problems yesterday as well as other platforms. Then you tried to call or do a trade, nobody's answering the phone because the phones are going crazy. So this is another stressful situation to be in. Imagine being a long or shorter position that's moving like crazy and you're prohibited from taking action because of not being able to get into your account or be able to call into the brokerage firm. So lots of stress, a lot of craziness on Wall Street this week. And I think it's a sign of the top in the market when you start seeing this kind of crazy casino action where you buy anything. Now think about it. GameStop is virtually bankrupt and was trading at a market cap of something like $25 to $30 billion when they're basically worth nothing. AMC Theaters was trading at $20-something a share, it's probably worth 5 and may even go bankrupt down the line. So it's craziness on Wall Street. We also see penny stocks starting to fly, companies that, we have a client that called up and unsolicited bought a stock for a penny a share. He bought 200,000 shares at a penny, right? A couple of weeks later, it's 24 cents. Think about that. That's 2,400% on your money. And we had to twist his arm to sell it because he was so caught up in the greed. So we're seeing people now trade stocks that have never been in the market, don't know what they're doing. It's kind of like a David versus Goliath situation that we've seen this week, where the big hedge funds on Wall Street, the big traders have gotten fleeced, and many of them may even go out of business. That's how much money they lost. And many small investors made a fortune, assuming they sell at the right time. They could sell right now and still make a fortune, but many small investors have gotten incredibly rich this week. And the main Wall Street types are trying to do everything they can. They wanted the Reddit, the subreddit, WallStreetBets site closed down, so people couldn't communicate. Again, this is more censorship. Only the big guys are allowed to make money. The small guy can't, and they'll do everything they can and try to deplatform any of these sites where small investors can band together and invest in something that they decide to invest in. There's nothing illegal about that whatsoever, but the big boys don't like it, and they're going to do everything they can through the SEC, through Reddit to try to shut them down, through the actual brokerage firms who will prohibit small traders from buying certain stocks so they don't get burned again in the next big short. And that's what they're looking for. These traders are looking for large short positions so they can trap them. And when investors band together, markets move, no matter what market they go into together. But an ingenious guy on WallStreetBets decided to go after stocks with huge short positions, get everybody to do it at the same time, and they made a ton of money, and good for them. All right, so join me each and every Sunday, 9 to 11 a.m. Just go to thefinancialphysician.com, no matter where you are, as long as you have an internet connection or good cell phone service, and click on Listen Live, 9 to 11 a.m. Eastern Time. Also, you could subscribe to this YouTube channel. We just got it up and running recently again, and we have, we don't have a whole lot of followers quite yet, so become a subscriber, like it, share it with other people. And if you want to get on my email list where we'll notify you when we put up a new podcast or a new YouTube video, go to my email address, which is lou@afminvestments.net, lou@afminvestments.net, and say, put me on your email list. See you Sunday on the radio. Take care.